The reinsurance sector is undergoing a dynamic shift, shrinking due to mergers and acquisitions, while also expanding by tapping into new capital providers and finding new risks, such as cyber, flood, and mortgage. AM Best hosted a panel to discuss these trends.
There's a lot of talk about innovation, but it's not just innovation in terms of technology, it's innovation in terms of product and distribution. I think that reinsurers are definitely striving to find ways to get closer to the risk. This is also true of the alternative capital as well. People want to try to get as close as they can to the client to try to own it, so to speak, so that they have a consistent and stable source of business opportunities. And then there's the changing landscape in terms of products and business opportunities with regard to structures. I think that we're seeing new unique risks that are presenting themselves, and I think the reinsurance market is responding.
In our industry, the pendulum swings. When losses get out of control, we tend to focus on the loss ratio, and when expenses are a problem, we tend to focus on the expense ratio. I think we've been in a period of fairly benign loss activity, despite him and the losses of 2017. But in general, there have not been huge capital events to the balance sheets in the past few years. And I think that's contributed to a sort of a complacency about pricing and the loss ratio, but a lot of focus now on cost, scale, M&A, and those sorts of things to improve the operating efficiency. I think we're in a volatile industry. That's what we do. I suspect the things that will change us most will be some unexpected event, as it always seems to be. And then probably problems will emerge on the loss side. People will wake up and the pendulum will swing.
I think having a combination of alternative capital with potentially a lower cost of capital, different types of investors, different investment horizons and expectations, with equity capital backing traditional reinsurers and insurers. And I think the partnership where the traditional insurers and reinsurers bring the underwriting expertise, the claims expertise, and the distribution to the equation, I think the combination can be interesting.
Scott, let's go to alternative capital at this point. First, what are we reporting in terms of the presence and the amount of alternative capital in the reinsurance market these days? And the second question, of course, is it going where it's always been going, or is it going to new places?
I think the number's somewhere around just below or at about 100 billion. I think that it will continue to be very prevalent in the property catastrophe space. I think there's also been, maybe not looking at the fact that alternative capital or the capital markets have been in, the life insurance space for some time now, and they don't have necessarily an aversion to longer tail classes of business. It seems to really depend on modelability and the availability of data. And so if those two elements are there and present, I think that we'll see that this third party or convergence capital, whatever it's particularly called at whatever time, will look to explore those places. I don't know how quickly it will happen, but I think there's certainly opportunities in those spaces.
The thought that comes to mind is that this is where partnership between traditional reinsurers and alternative capital can play a role. The traditional reinsurers have the rated balance sheet, can access the risk, the distribution's in place, the underwriting capability. Whether or not they can attract alternative capital to back some of this longer-tailed exposure, maybe there's some type of a structure where you can cut it off at some point in time once the tail is matured and the losses are relatively known. That it goes back to the rated paper, so to speak, from the alternative paper. I think that holds a lot of potential for the future, and it is a way that traditional reinsurers can reduce their cost of capital over the long term, earn non-risk fees, service revenue, which also will lend stability to their operating performance over the longer term. So I don't know what, no one has a crystal ball and no one can really tell what the future holds, but I do think that it has a lot of possibilities and potential for that type of partnership going forward.
To view the full webinar, visit ambest.tv. For AM Best TV, I'm Meg Green.